Welcome back everybody, and today I'm gonna be analyzing currency pairs, right? My name is Jay Markets, so welcome back. Alright, so today I'm gonna be analyzing gold and USD pairs, right? Now, as forex traders, guys, the first thing that you need to do when you open your charts, you need to open this pair right there. This pair is called DXY or DXY, sometimes called USD dollar strength index, right? So what is this? This means that this is actually US dollars in comparison to any pairs in the world, right? US dollars against any pair in the world. So before you trade USD pairs, which is XAU USD, which is gold, or any other currencies with USD, right? The first thing that you need to do is to open DXY. Alright, so then you go to D1. D1 means each candle represent one day, right? So the reason why we start by analyzing DXY is because we need to know what USD is doing, right? So this is, as you can see, this is US dollar in comparison to any pairs in the world, right? So what is US dollar has been doing? This is what USD has been doing, guys. USD is bullish, right? As we all can see that USD is bullish. This is how I catch one of those trades. Them 1 is to 10, which is 1000%. Alright, so as swing traders, guys, as I'm a swing trader, what you can do is, this is what's going on. Alright, and then your stop loss will be right about there. Now why? Okay, let me show you my strategy. You can even go and check on my series video my strategy, right? As you can see that USD has been in this range, right? And so these are my point of values, right? These are my point of values. I'm looking to buy in these ones, I'm looking to buy in these ones, I'm looking to sell in these zones, right? So I'm looking to sell in that zone, I'm looking to buy in that zone. So the market has been bullish like this, right? So this is what we call tracing the bullish or the impulsive move, right? This is a bullish impulsive move, this is a retracement, bullish impulsive move, a retracement. So we're anticipating that the market will go all the way up to touch maybe there or maybe reach somewhere there. So this is D1, right? So if you are to trace again and push and put this thing right about there, as you can see, the market filled this gap. So we are also confident that the market will fill that gap. I'm actually live on this trade, right? So what did I saw? Again, for the confirmations, the first confirmations that I saw is that I'm at a key zone, right? Or at my point of value, all right? Which is I'm at this zone right about there. As you can see, the market is bouncing there, right? The market came down and bounced again. So if you can draw, or if you can touch these 2 points, you will see that the market is at a key zone, right? Now look at this, guys. This is our strategy. You can even check that strategy on our series videos. Go and look it up. As you can see, this is first leg, second leg, so this is a double bottom setup or a W setup, right? And then the market breached. What do? I wait for retest. So the market retested right about there, and what do? We do something like this, right? We do something like this, put a stop loss above, put a stop loss below, and then we anticipate that the move will come all the way and touch right about there, right? And why are we so confident that USD will go and touch all the way that side? It's because of this thing, right? This trace, this bullish trace move, right? So it's gonna go and fill up all the way. Now, just to give it a benefit of doubt, we can just, do something like this. Why? It's because we can really see that there is that high right about there. Okay, so we are aware that the market can come and do this and lose momentum and then try to turn back, right? So not necessarily having to stretch all the way and reach to this spot, because that's the maximum, right? So fine, as we can see that the market is USD this week is very bullish, right? So this is Dixie. So when you're trading gold, right, gold is XAU USD, which means gold is selling. Pretty much gold will be selling. So let's go and see what gold is doing. Alright, let's go and see what gold is doing. Now gold, as you can see on D1, right, gold has been bullish, right? Gold has been bullish, as you can see. Gold has been bullish, right? But now gold has reached what we call demand zone, right, for sell, right? This is the zone that I was talking about on my series video, that if gold reaches if any currency pair or any pair reaches close to 100% Fibonacci level, it's a sell, right? So let me show you how it is, right? So this is what we do. The first tip that you see, and then the last tip that you see, right? So this is let me show you. So this is the 100%, right? So now this is the sweet spot for selling. Okay, this is a sweet spot for selling. If you are trying to sell, this is a sweet spot for selling, and then this is the sweet spot for buying, right? So what do we do as price action analysts? We sell when the price is high, we buy when the price is low. And then where is our equilibrium? Our equilibrium is what about there? This is the 50%, right? This is the 50%. So let me remove that. As you can see, what has gold has been doing? Gold has projected us with our analysis, with our gold has projected us with our reversal pattern, right? Gold has been moving like this and then created a shoulder and then a head, and then what about there? It created a shoulder. Okay, so we are anticipating that gold will breach this level, retest a bit, and then goes all the way and fills this gap, right? So this is our weekly analysis on gold. So what do we do on gold? We short on gold as we are buying USD, so gold is selling, right? And as you can see, this is a valid key zone, so the market will react anyway on that level or on this level, as you can see, or even touch 50% Fibonacci retracement. Where is our stop loss? Our stop loss will be somewhere above, right about there, and then this is a good risk to reward ratio. This is just based on D1. So if you want to go on a smaller time frame to catch those smooth sniper entries, you again can tweak down and go to lower time frames. Let's go to H4 and see what is gold doing, so that we can try to catch some smaller some sniper entries, right? So let's go and see what's going to happen. All right, on a smaller time frame, guys, let me stretch that a bit. Let's see what's going on a smaller time frame. So let me just delete these lines, right? Okay, on some smaller time frame, as we can see that gold is in this range, right? So what are we hoping to see in this market, right? For us to be confident, so for those who trade smaller time frame, right, as you can see, this is for those who trade bigger time frames, right? Because they're not waiting for any confirmations for the smaller time frames, right? So but if you have small equity, like all those $10 accounts, what you are waiting for, let me show you what you simply do. What you're simply waiting for, you're simply waiting for this confirmation, a breach of this trend line, right? This is a strong trend line, right? And then if the market breach this level and retrace like this, and then you can sell, and then you can easily go short, right? Go short. Okay, and then your stop loss would be tight, right? Again, you could be easily trying to catch these lows. Let me show you these lows. Okay, this low, and this low. If you are to trade some smaller time frames, if you've got small equity, right, you do something like this. So as you can see that let me do something like this. Okay, so now let me try to also do something here. As we can see that this is our neckline, right? The market came up all the way and then did that and then did that, and then so we are anticipating that the market will breach this level. Sometimes it doesn't retest this trend line, right? So be aware of that. Sometimes the market does something like this. If it shows some wicks on this level showing that it's failing to breach this one, it will go down. So you will actually have to sell there in your stop loss just above the neckline of that. So your stop loss will be safe like that. So that's how you catch all those 1 is to 10, okay, type of trades, 1 is to 6, 7, okay. So if you are to risk something like $10, you get $100 or 50 or 70, whatever. So this is how I catch the trades, guys. So gold is still trying to break this zone right about there, right? Sometimes gold will do like this, as you can see, all right, and then does something like this, right? And then does something like this. This is still valid because why? Because this is also in our strategy. This would be head and shoulders pattern. Okay, this would be a variation of head and shoulders pattern. What I'm interested in gold, I'm interested in gold if it breaches this key zone, right? If it breaches this trend line. This is a strong trend line, so wait for it to breach this zone before you anticipate any selling pressure, right? So if it breaches this zone, we've got 2 entry points, as I've been emphasizing on my series. As soon as it breaches this zone, you can always sell again, or you can always wait for the pullback, right? So the pullback, let me just do something like this. Okay, so the market will also breach this zone, right? And you can even sell when the market is at when the market breaches this zone, right? Because it will create a shoulder and then a head and then another shoulder. This is another variation of a shoulder. So the market will breach this zone and then does maybe a little bit of this thing right about there, and then hopefully the market will go down, right? So what is the other variation of entry points? We can always enter gold like so. As soon as gold breaches this zone, we can just simply sell and then not wait for a pullback, right? And then we just put our stop loss just above there, and then we can just hold. But the nicer part of waiting for pullbacks is that your entry point would be there and your stop loss would be tight. So it's simply that. So waiting for pullbacks is maximizing your risk to reward ratio, right? So let's go and check on our currencies. Since we are selling gold, so all the pairs with the USD on your left side, they would be bullish, right? And then all the pairs with the USD on the right side will be buying. All right. So now let's go to see what is Euro USD doing. Euro USD will be selling. Let's go and see what's going on. As you can see, Euro USD has been selling on H4. Let's go again and see what's going to happen. We always start on D1 for the bigger scope. So this is a weekly analysis, guys. This is what will happen throughout the week. So for those who are trading currencies, guys, look out for these things, right, that I'm actually doing. So it's actually a signal for other people. Some other people are actually selling right about now as I'm